Imagine walking into a bank. You see the vault, the tellers, the stacks of cash. You feel safe. You assume the money is there. But what if I told you that the real banking system doesn't happen in that building? What if I told you there is a second, invisible banking system? One that operates in the dark, with no regulators, no insurance, and no rules. They call it the shadow banking system. It controls nearly half of the world's financial assets. It moves trillions of dollars while you sleep. And right now, it is making a bet that is mathematically impossible to pay off. To understand this nightmare, you have to understand one boring word: liquidity. In the normal world, if you need cash, you go to an ATM. In the billionaire world, if a hedge fund needs cash, they go to the repo market. Think of the shadow bank as a pawn shop for the global elite. Hedge funds and banks take assets, like bonds or mortgage securities, and pawn them for overnight cash to make more bets. But here's the trick. In a normal pawn shop, if you pawn a watch, the shop keeps it in a safe. In the shadow banking world, the shop takes your watch and pawns it again to someone else, and that person pawns it again. It's called rehypothecation. One asset is backing 10 different loans. It's a house of cards built on a foundation of air. So, why do they do this? Greed? Yes, but mostly leverage. Shadow banks use something called derivatives. A derivative is just a fancy word for a side bet. You aren't buying the stock. You are betting on which way the stock will move. The global GDP, the value of everything Earth produces, is about $100 trillion. The value of the derivatives market? Estimates range from $600 trillion to $1 quadrillion. That is 10 times the value of the entire planet's economy. Major banks use these shadow subsidiaries to hide risk off their balance sheets. They look healthy on paper, but in the shadows, they are leveraged 50 to 1. We saw a glitch in this matrix in 2008, but we didn't fix it. We just made it bigger. When Silicon Valley Bank collapsed, it wasn't because they ran out of cash. It was because the shadow market stopped trusting the collateral. When the pawn shop stops taking your watch, the cash freezes. And unlike 2008, the central banks are trapped. If they print money to bail out the shadow banks, they trigger hyperinflation. And every ATM in this world stops working.
The regulators don't even know who holds the bag anymore. We are living through the greatest experiment in financial history. But history tells us one thing: shadows disappear when the lights go out. Do you keep your savings in a major bank? Or have you moved to hard assets? Let me know in the comments. Subscribe for the truth they won't tell you on the news.